Hi, everybody. Good afternoon, good morning, wherever you are, whenever you're listening. It's Greg Yamiko here. And, well, it looks like I'm live now. Hi, everybody. This is Greg Yamiko, and I look forward to going through some more questions with you all and looking at the opportunity to share some of my experiences that could be helpful. So, a little history. I'd like to do this at the beginning for the new members. I have a software company currently. It's called Efficients, and we do custom software development, mostly in the mobile app and e-commerce space, a little bit in the SaaS space, and so we build applications that companies need to um, be more specific to their respective needs. And previous to that, I went to India in 2004 and set up an office over there and have a development team in India, and have ever since then. Before that, I was in the investment world, and I started a mutual fund back in '95 and ran that mutual fund to some nice successes, and then ended up selling that off around 2006. So I did a little crossover, but I got into software because our investment world, which we had a lot of growth. We were the number one growth and income fund in the country for 3 and 5 years back in 2000. And that was all based on investing in a more connected civilization. And anytime we have a transition for higher degrees of connectivity, going back from like the telegraph to the automobile, to railroads, to the automobile, to the telephone, we had changes in civilization that created a lot of opportunity, a lot of profitability, and the internet was doing that in the 90s. And we were investing in that space to take advantage of that connectivity and so forth. But from there, I saw the future being connectivity through software, and so I wanted to get into the investment space and found a partner, and we set up our own company that was building custom software applications. And initially, it was doing like a lot of web development and so forth, and then we emerged into the app space when apps came out. I saw that being a direction and future for a lot of growth. So the team learned how to do mobile app development. So anyway, that's where I am today, and hope that gives you a little bit of relevance to how I answer some of my questions, or answer some of the questions here. So let's get started. First question is from Michael Wildling. Michael asks, what would I need to put in place to help prevent infringement of my intellectual property from a new competitor on the market? Business description and background in question. I own a ticketing platform for selling event tickets. I am looking to get my website reprogrammed with a new reprogramming language. So, Michael, initially here, thanks for the question, and hopefully I can give you some insight. Sorry, I got a little siren background noise here. I hope it's not distracting too much for you guys. There's really not a lot to do when it comes to protecting an application out there in the software space. You can try to patent this, but patents in software happen in are very hard to get, and they happen in the space of a process format. So do you have a special process in selling your event tickets that nobody else does that you could process or you could patent because of that process? Okay, think about like Amazon One Click. Amazon One Click was a new process in how you could go about the shopping experience, and they patented that process. So they didn't patent the code they wrote for that process. They were writing, and so it's not a code related issue. It's the process of going through that one step process, and or one step buying. So looking at this, I actually had built a kind of event management ticket system for a client years back that they never really pushed out to the marketplace, and so it kind of got shelved. But just seeing a little bit about this experience, or having that experience, and also the experience of doing a software patent for myself. I started a mutual fund when I was in the mutual fund space in 2001, of a fund called the I Fund. It was based on collective intelligence. It was around the group. The group is smarter than the individual. So instead of having a portfolio manager or a team of portfolio managers, you had the decision-making process of the group. And you would nominate stocks, vote on them, and discuss them, and then vote on them to determine what got bought and sold. With that, I've tried to file a patent with it, and in the process of doing it, it took years, and eventually I sold off the fund group and closed out that and I didn't put any money. When the patent office finally came back, started talking to me, I wasn't willing to put more money into it, so I never did finalize that patent. But in learning about that, they were all about the process that you were going to follow, and to us it would have been the process of following the ability to buy stocks or have a collective group of people go through this, discussing, voting, and so forth, and then buying of stocks. That would have been patented and not the actual software used to do the patenting. So when you say on here that you're getting to reprogram, rebuild your site with another reprogramming language, that is not going to be a patentable process for you. Okay, just because you have a new software or new language in there doesn't. It's about the process that you're going about and selling tickets. So keep that in mind. What I would suggest to you is that you make your software the most user friendly, the most convenient, and so forth for users to have. That is your differentiating advantage and your unique selling proposition that you can put out there in the world. And when you do that, that's going to keep the competitors at bay. But it's in the software space, it's really hard to prevent somebody from coming in to do what you're doing. They just can make minor modifications and get around a lot of the patents that are out there and still kind of accomplish the same approach. So I wouldn't be spending a lot of money on the patent process. I would be spending the time and effort into looking at the competitors, looking at the world around you, and determining which approach and that you're taking with your selling of tickets is the easiest, most convenient, most I don't say affordable, but most appropriate to allow for an experience that is, people will say, wow, that was really easy and really cool to do, so I'm going to tell my friends about that. Good luck with that, Michael. Next question. Alex Wilkins. Alex asked the question, should I create an employee handbook? Business description and background question. I was thinking about how I am transitioning into a better leader and manager. Should I create a handbook for my workers so they know things are changing and I'm shifting my attitude and mindset towards new goals or on how the business should run? Okay, Alex. Good question. I love the idea of a handbook. It's excellent for creating an overview about who you are and what you're trying to accomplish and sharing that with people. But a lot of times, the problem with handbooks is they get handed out at the beginning of an employee coming on board to your company, and they're used to help them. I mean, they may shuffle through it to get a feel for what's happening, where they stand, how things work, and then it gets put aside and it's never get used. So I would recommend, if you did a handbook, it would be kind of on a digital format. It would be a PDF, or it would be like attached to a link on a web page that you would go through your aspects of your company. What I also like about this is that you have the ability here, and which is really key, is to share the culture of your company. Okay, I've said this probably in just about every session that I've done about culture, and I've been around the world with the Entrepreneurial Organization, EO, like AO, just you've got at another level. And with that, I've heard some the best speakers, the best book writers, the best-selling books, and so forth. Heard and met these people that are out there or sharing their ideas about business and changing the way business is going. And with that, what has struck me over the years is that the most significant and high valued point that people made is that a company is about its culture. It's about the culture you create or you don't create. Culture is there whether you're creating it or not. And then allowing to the manifestation of that culture to be stay aligned with the definition of what your core values are and your core purpose. I would put that, I would definitely outline what your core values are, what your core purpose, and what your BHAG is, your big, hairy, audacious goal. And if you want help with any of that, I'd go to jimcollins.com. Jim Collins wrote the book Good to Great, which I think is one of the best business books over the past 40 years. Um, I mean, Peter Drucker's wrote fabulous books. Anything Peter Drucker's written is fabulous. But Jim Collins' book has an approach to it that gives a lot of insight to business owners that are easy to understand and real metrics to the relevance of a business. They compared two companies that were alike, like Walgreens and CVS, where one went skyrocketing up over a period of time relative to the sister company and relative to the marketplace. So the marketplace may have been down here, the sister company may have been really level with it, but then they looked at why this other company did a 10x or some significant multiple of what the market has done and what the sister company has done. So Nucor Steel was one of the other companies, and they had a steel competitor or steel sister company in the steel industry. And so what they found was a lot of commonality of things. And one of those commonality was having a BHAG and having these core values and core purpose in place. Jim Collins in it, look under his tools in there, and he's got articles on how to create your core values and your core purpose. So very, very important, because once you get started with this, or once you have this in place, this handbook that you're talking about, and this cultural aspect, knowing what your core values are, they're usually like 4 to 6 core values in a company, and they kind of create the model of what it looks like for people that are in your company. And it also creates the model of when you're hiring people, when the questions you ask and the aspects that you're looking for in that individual, do they align with what your core values are? That's a huge relevance. And I've heard examples of people say that if you have an employee that's, let's say, the leading salesperson in a company, and he's selling by 2 times, but he is not meeting your core values, you have to let that person go. Okay? If they are not aligned with your core values, they become a bad apple in the sea of apples that you're trying to congregate together and try to take to a certain direction. And when that happens, it causes for a spoilage, bad things. So you want to stay away from having people that are not aligned with your core values in your company. Like I said, it should be a living document, and so that you can modify things and update it. Not like changing your core values, because once you create them, they usually are not going to change unless it's over a long period of time, 7-10 years or something, where you may be evolving into something more of a company. And so, and typically, once you set your core values, it's kind of like your foundation. That's your concrete poured. That's your stable rock of who you are. But I would allow it to be, what you would want to modify in this handbook is the fact that examples of people using core values, what it looks like to be somebody who is representative of this company and what you're trying to accomplish, and examples of things you're doing to get to your BHAG. BHAG is a big, hairy goal, audacious goal that's 10 to 20, 30 years out, okay? And you would be like, what are you going and what are your plans to get to that, along with the processes of your company. Okay, a handbook is about processes and what happens at certain stages of where you are in the company. And I would definitely want somebody to be seeing the processes and approaches that are being taken within the company. So I just had a form mate of mine create what would be like a PDF of a handbook, so to speak, but it was more summary of where they are in the marketplace, what their competitors look like, where the industry is going, where a lot of the work is coming from in industry, and so forth. And these are good overviews for people to see what's going on, have alignment. He included some financial aspects of the company. So, not like salaries and stuff, but like the overall direction of what the company was making, where they were going, because he wanted to have more of that open book management approach. So, anyway, I think I covered all that. So, hopefully that helps, Alex. Next question. Ricardo asked, Ricardo Delgado asked the question, based on the current economy, any negotiating tips as I go in to renegotiate my retail lease for my barbershop? Business description and background question. I have a barbershop with a 4-year lease with 12 years secured. Would I be able to negotiate that? Also, when I first started, I used my personal name to sign the lease, but now I have an LLC. Can I transfer my lease to my LLC as well? So, I guess, Ricardo, I need to ask, is your lease coming up for renewal? If it's coming up for renewal, then it is an opportunity to renegotiate things. It's also an opportunity for the landlord to raise your rents, given how inflated everything is now, from pricing of real estate to the renting of real estate. Huge increases in that. And hopefully, if it's not coming up soon, you can hang on for a while before you're going to have a increase, or to renegotiate this where they may be increasing your rents. You said that you had a 4-year lease with a 12-year secured. Does that mean that you can, when you're saying it in that format, secured, you usually see something like, I've got a 4 or 5-year lease with a renewal option for another 5 or 10 years or something like that. So does that mean you can renew this up to 12 years? And so that's going to mean something for you, is that renewal. You have the option to renew it, and as long as you meet the requirements of the lease, then you have that ability to renew. Okay, so some negotiating thoughts here, that to hopefully not get if you're coming up and they're looking at raising the rents, I would come back with some negotiating points, like looking at your history. Do you pay on time or early? Okay, do you take care of the property and so forth? And is there an inflation clause already built into the rent agreement, or is it done on a periodic basis? So something to keep in mind there on what you're looking for. And it also should be clear about who pays for what repairs. But in this world right now, it's tough in negotiating it price wise. That right now the sellers have, the buyers are in a bad situation. The sellers have the advantage because the things are so inflated and so high, and the demand for the properties are so high that you put something on the market, it gets snatched up right away. So usually things are going for more than what was listed, because there's a competition, and that competition, high demand, creates the people outbidding each other to try to get that property, pushing it up. So the owners of property have a lot of leverage right now, whether it's form of selling it or in the form of leasing it. So leasing it has a little bit less because there's other viable alternatives out there, with a lot of people working from home and a lot of offices closing down and creating more office space. So there's a little bit better of a situation with that. So you may have some room to grow. What I would do, though, is your lease is coming up for renewal, your biggest negotiating tool is to have other places available for you to go, and that are affordable to you. So I would look in the marketplace for options. And when you have those options available, you negotiate your lease from a stronger standpoint that you are getting what you want. If you don't, you go somewhere else. Moving is tough, expensive, and so you don't want to move if you don't have to. But looking at this and looking at your situation, the best thing is to have those other options available. Just like when you go to buy a car. You go to 2 or 3 dealers and you have them compete for your business, and that's the way you're going to get the best price. Let's see. Also in the renewal, you can change the company to an LLC, or you can change the ownership in the rental agreement to the LLC. So this is something you can talk about with them. If you've had a good history with a tenant and you're just saying, I just want to put this in my LLC, they should be fine with it. But sometimes that's going in a business name. A business wants more security, so they may ask for a personal guarantee from you, along with which what you were doing to start with. You had your name on it, so you may not be uncomfortable. But I would try not to have yourself. Once the advantage of the LLC, it's based on the assets and the value of the LLC for security, and you shouldn't have to be securing that on in addition to the LLC. So but a lot of that negotiating is going to come dependent on your relationship, your history, and so forth. If you paid on time, you're not been an issue with the landlord, they will probably easily transition to the LLC, which is highly recommended. Hope that helps, Ricardo. Next question by AJ Couts. Let's see. Question to ask: how can I prepare my business to survive in the event of my passing? Business description, background of question. Recently, my wife and I, co-owners of our business, had a living will drafted for the protection of our children and assets. Going through the process, we realized we needed a contingency plan for the business too. From a legal perspective, we have that figured out. However, from a process perspective, I'm not sure what we should have in place to prepare ahead of time. If we were to pass, we want the new ownership to be equipped as possible to pick up the pieces and continue. Thanks. So, AJ, the approach to transferring a business is usually outlined in an operating agreement, as you probably became well aware of if you were talking to legal people about this, and you set it up for yourself. So the business would transfer to one spouse or the other unless both of you were to pass at the same time. So if you both pass at the same time, then it's going to be structured according to your will. Now, how that affects the business is different aspects of that. There's different scenarios to that. And one is, do you have insurance to help do a offset for the transfer of the business? A lot of times there's insurance on the owners to buy out the interest of the other owner. Okay? In this case, you and your wife are owners, so it would automatically pass to the other person, and the survivorship of the business would transfer 100% to them. And that would be in their hands for the potential transfer to the children. Now, you said your children, I don't know if they're if they're young, minor kids, or if they are of adult age, which could be potential takeover aspects of the business. If they were going to take over the business, are they working in the business and so forth? So you don't put this here, so I don't know some of those answers, but those are some things I'd be looking for to understand what would be the best opportunity to pass this down. But in my experience, I have the insurance built into it for transfer of ownership and so forth, and also I would look at let's just move on to the processes, I guess. For the process of running of the business, things that you put in place, what I've seen in the past is that you want to run your business like you're getting ready to sell it. And there's books out there that says, like, run, or just like that, run your business to sell, management before you sell, and things that would allow for you to have the best valuation when you were selling, and have all these things in place that would allow for the transfer of your business. Like, one, that a lot of businesses are valued based on the owners. If the owners are gone, it decreases the value significantly. So don't know if that's your situation. If your business is running smoothly you're not working in your business, but you're working on your business, that is a key aspect here, and will help with the valuation. But you also didn't talk about, you said who you would pass it on to. Do you have employees that you would pass the business on to? Or is that set up an operating agreement for a potential transfer? If that's the case, then the employees, the processes you would have in place would be important to allow for that transfer to take place. But it would probably be easier too because they would be aware of the processes and what was happening already. So, I mean, this can be looked at as like if something was happening to both of you, the business would be sold. Who's going to be the trustee of the will that's going to manage the process of selling the business if you both are gone at the same time, and so forth. So there's just a few more questions really to help you here that need to be answered. And so I'm just asking the question to help you give insight. A lot of times asking questions have the answers kind of like built into them once you figure that out. Okay, and also if you have employees in the company and you're going to be doing a transfer to them, and the process for that, a lot of times it's best to have in the operating agreement already, not that you're just transferring to somebody, but what is the formula that you're going to value the business at when you transfer it, okay? That's good from the partners. If you're listening to this and you've got other partners in your business, in your operating agreement, it's best to have a preset formula. Like, you can say 1 times revenue, or you can say 5 times EBITDA, your net earnings before tax, depreciation, and amortization. And you guys would set that, and that's going to help determine what the life insurance amounts would be currently, and then as you grow you would adjust the insurance to account for the higher valuations. But having that formula in place is very important and attractive to minimize complications, because if you have multiple owners in a business that are not related, separate, and one passes, then that one passing is going to have to negotiate with the surviving members of the business, and it could put the business in jeopardy if you do not have this formula in place. It could be a big fight what that valuation is, and a lot of expense, a lot of time, appraisals. Just that an appraisal for a business costs $10,000 to $15,000. So a lot of these things take place when you don't have some of those aspects. So I would look at that in your situation, and please email me with greg@efficients.us with some of those other answers, and I'll give you some more feedback. Thanks a bunch, AJ. Next question is from Kristen Lander. Kristen asks, is there a threshold for percentage of revenue that we take home we should aim to stay within? That we take home we should aim to stay within. Business description and background. As I scale my coaching company, I'm paying out about 46% of revenue to my 1099 contractors, and about 15% commission to partnerships with other businesses. This means I'm retaining as low as 39% of revenue with clients brought in on partnerships before expenses, which right now are fairly low, but doesn't leave much room for me to hire admin until I significantly increase my profits. Is this just a normal part of the process, or should I be considering changing something as I continue to scale and bring on more contractors and partners? My prices are already at a high end in my industry, so raising prices right now probably isn't a good solution. So, Kristen, okay, well, I'm not sure where you're coming from in a couple areas, because your numbers sound somewhat attractive to me. If the fact that when you say you pay out 46% of revenue to your contractors, are your contractors other coaches that are doing the coaching for the clients that you're bringing in? Okay, and if you're paying them 46% of revenue, it is a little bit high, but that means that you get 54% left over that you don't have to do any work except manage the accounting and the other aspects of the business. Okay, so I see you that are you getting a 54% profit margin on business that is that you're not having to do any work for? Because coaching is timely. It takes a lot of time, and it's hard to scale a coaching company unless you have other coaches or other processes where you can do group coaching. So I would look at that and see what is the answer to that question. Usually your cost of business, typically in a business, is or your gross margin is around 65 to 68%, something like that. And that means that your cost of goods should be and would be 30 to 35%. Here you're saying that your coaching company is your coaching revenue is 46% of revenue. So if you're paying them that, you're making 54% without having to do any work. That's not the cost of goods does not factor in the cost of labor, depending. Your employee falls in the balance sheet below that. So if that is the case, that's a pretty attractive number. Now your 50% of commissions to partnerships, 50%, paying off 50% of revenue for marketing is a little bit on the high side, but it's very appropriate. If they're bringing you clients without much work and effort on your part, except the 15%, that's a pretty attractive situation. Okay, because a lot of time marketing and expense and time and people you're paying to marketing and so forth, partnerships are great for that. And I commend you for putting these in place and getting something where people are sending you this business for that 15%. That's very, very attractive. So as far as retaining what you talked about, or as far as do you have enough profit for hiring an admin and so forth, well, I think that it really depends on scalability here, right? Yes, you have it looks to me like a lot of profit opportunity if these coaches are doing the work for you, and so how much time are you spending on coaching? Are you working in the business or on the business? As I said previously, working in the business means you're coaching, you're being paid for your coaching time, and you have less time to manage your business and to scale your business. So thinking about that could be a determining factor of how much money you have available and so forth. But how many contractors do you have right now, and what's that total revenue look like, is more of an appropriate number. And then what would it look like if you had a few more contractors in place to do the coaching? And of course, I'm assuming that's what the contractors are. And what would that look like for your revenue standpoint? So you can revenue, minus the cost, to give you that profitability to, one, pay yourself an income, and two, to help with additional admin type people. So anyway, that's the way I would look at this. I need a little bit more information again here so that there's a little bit more clarity about how to help you with these numbers, because the percentages don't look bad, but then you got to look at the actual numbers too. So a couple things to think about here relative to if contractor is the person, is your coach, and so forth, and then what else? Just making sure that you look at those numbers from a scalable perspective. Okay. Thanks, Kristen. Next question is from Melinda Clark. Melinda asks, do I need to form different companies for different product lines or services? Business description and background question. I am a nurse practitioner. I created my healthcare practice about 6 months ago, and so far have been doing services that are primarily insurance based, muscle joint injections, and also dabbing in COVID testing treatment. I want to add more services that will be primarily cash based. Vitamin infusions, regenerative therapies, medical weight loss, and possible men's health. I'm having a hard time forming a branding strategy that encompasses both. And I believe that buyer personas in each service line vary greatly. Should I form a separate business entity, or is there a way to keep it all in one? I don't want to stop the service I provide now to shift its focus, but I want to expand into these other services. From what I see, the pros are more specific marketing, more defined focus practices. Cons, less cost effective to start, build, and market 2 companies versus 1. Yeah, and exactly. So Melinda, I wouldn't look at adding another company. The reason why is because in 2 companies you got to worry about all the different aspects of having a business. Your filings, your tax returns, and other costs or other aspects of things that you have to manage for that one business. Having 2 of them, depending on what level you are, is tough. So, and it's more costly. So I would shy away from that. There could be exceptions, but for the most part, I'd shy away from that. So I would focus on this brand that you're building and look at where you are making the most money, what brings you in the most revenue, what's your highest profit margin. Okay, if you go out and do, or if you have somebody come to you and they do a vitamin infusion, what's the money on that relative to insurance paying you to do muscle joint injections? As I've said, and you probably heard and read, it's all over the place. The riches are in the niches. Okay, it's very, very important, and we, as entrepreneurs, and the excitement of us, and I've been guilty of this bunches of times, get carried away of doing so many things to help bring in money that we don't focus on the one thing that is bringing us money, and that's where the opportunities lie. The most opportunities lie. So look at that. Look at what your analyze your business and see where you're making the most money. And as far and then start to focus and build on that. Not until you get to a level where you can bring in people to do these services without your involvement should you consider doing another level of service. Okay, so do any of these require your time right now? You're the next nurse practitioner, but you're also a business owner. So you got to look at it two ways. You're being paid as a nurse practitioner to do these injections, and you're making money from that. If you start expanding into the other areas, then you create a lot of complexity, and you also, like, your administrative side gets more complex. Okay, you have a person right now working for you that taking care of your insurance filings, because those are also very complicated and time consuming, and a lot of awareness goes into that can simplify the process and making sure you get paid and get paid on a timely basis. Because there are a lot of cash flow issues relative to the way insurance. I've heard quite a few stories on it that the time that insurance can pay you, you could run out of business and can't pay your employees and can't pay your rent and everything else. So that is an important aspect. Now, if you feel transferring to cash is going to be or like cash type businesses like the vitamins, which I think that's all great areas that you're going to. That's where the world's headed. That's the marketplace going forward. But is it appropriate for your situation right now? It may take a little bit longer for you to continue to grow this muscle injections and so forth and the testing business so that you have people there that are taking care of it. And once they are and you're not involved, then going to the next step and building that up. Now, to get directly to the answer of your question, as far as the branding of each, like when you have that one area running itself and it's taken care of, then you're going to be creating some profitability in that area that can help to market that. But I would segment it out in your branding approach and think about that from an overall big perspective. What you're doing, it sounds like overall health related, but this is like a longevity approach. Okay, longevity. So you're doing muscle and joint injections for longevity. That would fall under the same thing as doing vitamin infusions and regenerative therapies and so forth. So would you consider yourself a longevity practice and so forth? And if you did, then you would separate. You'd have an area of longevity for current health related, fixing current health issues, and what are like the more of the opportunity for maintenance and creating longer health that are not coming in to get. You're not fixing something. You're creating that situation where they're going to be able to be not have problems in the future because of the services you're providing them right now. Like, vitamin infusions. I've read a lot about vitamin C is a huge cancer killer, and high doses of intravenous vitamin C can be. So there's a lot of studies out there about it. So I'm just going from these studies. I don't have any personal experience with it, even though I do get vitamin C injections or IV injections along with other nutrients. I think they're awesome, and I think that's where the world's going. So and the medical weight loss and so forth, right now we're in such an abundance civilization that it's just hard to not overeat, and so many people are dealing with a struggle. We have more of a struggle of right now of obesity than we do of starvation. So I think that's it. You're on to a future growth trend, and a lot where a lot of money is going as we become more successful in this world of abundance, and what people are doing with making money now and how they have discretionary income. More people are putting money into things that are going to benefit their health. Their health is the most important thing in our lives. You don't have our health, you don't really have much. So the area is great for growth. So stay on this in that format. Try to stay it under one company. You can break out the branding a little bit, but try to have an overall theme of who you are, and then each one would fall under a certain area of that theme. So if it's like, I'm a longevity clinic, I'm here to help keep you in good health and physically able through your lifetime. And then you have the muscle joint things to take care of issues now, but then the area that takes care of the other side, like I said. Okay? Anyway, Melinda, hope that helps, and good luck, and email me at greg@efficience.us with any other questions. That's all that I have for this month. So good luck to all of you out there. Keep pushing onward and upward, and all the best to AO and all the people and Sean that are out there making this world and community more vibrant and interactive to help each other. So till next month, have a good one.